Want to get rich quick? Well, you either have to get really lucky or can I interest you in a bridge? Hi there, and welcome to Gimme 2. My name is Mark, and in this video, we will be discussing investing in just 2 minutes. As with my other videos, if you want to go straight to the 2 minutes, which discusses different types of investment classes and some of their characteristics, that is timestamped in the description. But if you stick around for a couple of minutes before that, I discuss some of the general philosophies of investing and other context that might be informative and useful. As a disclaimer, this video will not provide any hands-on advice as to where to invest your money, and is geared more as an explanation of the general investing landscape to help you navigate this really important aspect of personal finance. The 2 minutes will focus on fundamental investments like stocks, bonds, commodities, and certain alternative assets, but won't focus on things like options, derivatives, or some more complicated investments and strategies. I also won't be discussing real estate, an extremely popular investment that might get its own video somewhere down the line. Investing, for the purposes of this video, is the act of expending money with the intention of increasing its value to be used for major purchases, retirement, or anything you might want to spend it on. Investing is slightly different from savings, which involves putting money away in places like banks that provide extremely low financial returns. Savings tends to decrease in buying power because while that money is essentially doing nothing, the cost of goods and services tends to increase by way of inflation. I have a video on that, so be sure to check that one out. It's therefore seen as a generally good idea to save for things like a rainy day fund or near-term expenses and invest the rest of your available funds. One of the most powerful concepts of investing is compounding. In simple terms, this means that you can earn money not only on your investment, but also on previous earnings and investment payouts that you reinvest. Compounding tends to start slowly, but with enough time can have incredible growth potential for your investment. So it's generally seen as a good idea to start as early as you can to give it time to work its magic. As a back-of-the-envelope compounding calculation called the Rule of 72, if you take the number 72 and divide it by your annual growth rate, you will get the approximate number of years it takes for your investment to double. But isn't investing risky? Well, it doesn't have to be. Sure, there are high-risk investments like high-growth startups or a new cryptocurrency that can provide incredible gains but can also collapse and cost you your entire investment. But there are also essentially zero-risk government bonds, and both are considered investing. Most investments fall somewhere between, and there is a general rule along the investing spectrum: high risk, high reward. Diversifying, or spreading your investment into multiple sources, is a highly recommended way to limit risk by not putting all your eggs into one basket. When investing, it's really important to understand your risk tolerance and your time horizon. The sooner you'll need your money, the less risky your investment should probably be. This helps to ensure that your funds will be there when you need them. I know, this all sounds very complicated, but again, it doesn't have to be. Some products, like mutual funds or exchange-traded funds, are designed to help people without much investing knowledge. These products are one-stop shops, investing in a variety of assets, like stocks or bonds, diversifying the investment for you. Some funds, called index funds, even track entire stock markets, like the S&P 500, buying you tiny pieces of many stocks. If you want to keep it even simpler than that, you can work with a financial advisor who discusses your financial needs and then does the investing for you. While almost no investments come with guarantees, and there will certainly be ups and downs along your investment journey, taking a disciplined, non-emotional approach to investing can help provide an exceptional way to grow your wealth over the long term. So let's take a look at some of the investing categories that can be incorporated into your long-term investing plans in the 2 minutes. Before we do, however, if you find this video helpful, informative, or entertaining, please consider liking, subscribing, sharing, commenting, all of those good things that help videos like these reach broader audiences. It really does help the channel grow. But for now, let's get back to investing in the 2 minutes starting now. Investments are grouped into two main asset classes, stocks and bonds, and other classes like commodities and alternative assets. Stocks are shares of ownership in a business that can be purchased through exchanges. Stock prices change based on company performance, allowing owners to potentially sell at a profit. Many companies also give shareholders cash payouts called dividends. While stock prices tend to rise over time, market conditions and company performance do put stocks at risk of losing value. Bonds are just loans to companies or governments. When you purchase a bond, the borrower will pay fixed interest payments until the bond agreement ends, and then they'll repay the loan. If the borrower can't repay, then the bondholder will lose part of the investment. Borrowers with higher chances of default will pay higher interest rates. As bonds are usually lower risk than stocks, they tend to provide lower returns. Commodities are raw materials like oil or gold that can be traded through exchanges. Like stocks, investors profit when they sell at a higher price than they purchased. Unlike stocks, commodity prices tend to fluctuate rather than steadily rise. While some investors try to time those fluctuations, most use commodities to diversify their investments or protect against inflation. Alternative assets don't fall into the other categories. These can include real estate and riskier investments like currency trading, hedge funds, venture capital and private equity, and derivatives, but can also include unique investments like art and collectibles. Alternatives can both diversify and provide significant returns to a portfolio, albeit often with much higher risk. And that is the investment landscape. I'm fairly familiar with the general investing landscape, but I still found it very informative researching and refining that research, and I hope I was able to deliver that clearly to you. Investing, in whatever form works for you, is extremely important toward long-term personal finance. If you're not currently investing, I hope you can at least take this video and look into it a little bit more and perhaps put that into your long-term plans. Thanks for watching, and I hope to see you in another video.